The stock market actually boomed on Wednesday because we actually did get confirmation on those rate cuts. But then over the next couple of days, we started to struggle. So it's very important that you guys actually do get the bigger picture. So if you didn't check out my Saturday video, I encourage you to go click that. I'm going to pop up the thumbnail here, go look for my channel, and then join us back once you're finished with that video, because it's important to look at the overall grand scheme of things and realize just how important these next 2 weeks are. But thank you for clicking on my video, and we're going to get into the whole week ahead, and we're noticing a lot of signals, but we're going to do some technical analysis for the SPY Qs, Apple, Tesla, Amazon, and Nvidia, and we're going to start out with the SPY right now. Now, on Saturday's video, we were pointing out those divergences that could be forming on a weekly chart, and that's actually what happened at the top of this market around the last time we were around this area at the all-time high. So what I just wanted to point out here is actually this divergence is no longer intact. We actually did come up a little bit higher, so we don't necessarily have divergences at this state. So that just tells me that there is a bigger possibility of this just being some kind of quick pullback if we do drop out of this wedge. So I have updated the weekly expected moves, right? We have 475.93 to the upside and 462.73 to the downside, and that's a pretty good range. But as of right now, we're actually using these yellow lines, which is the monthly expected move for December. We actually broke through the top of it, and we actually saw support come in with that expected move. And that can happen once you get outside of it, but we do still have that 68% chance to land back within this zone by the end of December. So by the end of December, we could be all the way down here, and that is what is expected by the options market. Now, going all the way down here isn't what is expected. It's most likely just landing within this zone, but we can see that Bollinger Band, if we want to go test the bottom of it, it's sitting right at that monthly expected move. That's why it's good to put it on your chart as of now. We're noticing there is some wedging, but overall, this was just to show you guys how price is still tight. Even though we do have these Bollinger Bands that are starting to expand, we actually can see that we've been in a pretty tight structure this whole time, and we could see another explosive move. So if that does break out to the downside, you can see the measured move from this wedge brings us down to extreme low levels, down towards this actual gap around that 422.50. I don't necessarily think that we get to there in December. Now, we could see some selling go into January, and maybe we do set up some kind of negative trend here, and we get actually some kind of bounce from this level and then see it go lower, testing that trend line that we've held up at for quite some time. Now, if we do want to get outside of this range, let's say some bullishness still comes in and this was just some kind of minor pullback at this point, or maybe we do go down to the 9 and then we start to bounce back up. So it's going to be very important if we actually close outside of this structure and if we close below the 9-day moving average. So what we want to pay attention to the upside would be that weekly range, right? We want to pay attention to the weekly range, but also we want to see if we can come test that all-time high from previous before, right? We want to see if we can test this high. Maybe we even break above that and set up that divergence on the weekly that I was talking about in my Saturday video. There are some bearish thumbnails, right? I do have some bearish thumbnails, but if you actually pay attention to the content, we're stating that there is no negative trend. You have to be bullish here because we are in positive territory. So if this does want to curl up, you're going to see this cross, right? We're going to see this cross in positive territory, which means we can go test this high, come to that weekly expected move. And if we want to get really bullish, we can come test that all-time high. So overall, right now, we do have some signals that are pointing to some kind of reversal, but in the near future, we have to remain bullish until we actually see this negative trend start. Maybe we get some kind of bounce up on Monday, and then we get some kind of sell-off to break out of this wedge, and then we can see this start to creep back into that negative territory. A little bit different from the SPY, we actually do see that divergence still holding here on this MACD. Okay, we see that divergence still holding on this MACD, but if we do go up a little bit higher and we close at this level, then we could see this, invalidated. So overall, you're just paying attention to this crossing to the downside, good sign of that pullback coming to fruition. But on the shorter time frames, it's a little smarter to pay attention to those. We'll get into that in a moment. Actually, let's tell you guys these weekly ranges. 411.29 to the upside, which sits right around that trend line, right? The trend line that we've been in for this big overall wedge. We can see that that trend line's right above us. So if we do want to get towards that weekly expected move, we could test these type of levels up towards 411.29 early on in the week, and we'll have to see what plays out from there. Now, to the downside, you are paying attention to this 399.39, and that's going to be your lower target for the weekly expected move priced in from the options. On the daily, if we are going higher, if we're actually going to go higher in a healthy way, meaning we don't just see some kind of surge and then fade back down once we get to that weekly expected move, what we'd want to see from here is it to actually come down and reconnect with the 9-day moving average. If it actually drops down and is able to reconnect with the 9-day and then get some strength, that would be a little bit healthier. That, or if we actually move sideways for quite some time, maybe even come sideways and a little bit down to catch up to this moving average, catch up to the 20, then you can use those to really project higher. As of right now, you do have that divergence up here on the MACD. You don't have it on the RSI at the same time. That's why I'm overall saying this is most likely going to be some kind of pullback. And an area where we could hold up is actually right in here. So if we want to hold up at a higher level, I would really pay attention to this 383.50 level, because if you look at the structure that could form here, if we do see some kind of dramatic drop and then we get a bounce, well, this could be all that is really priced in, right? This could be all that we need to then go higher, because we'd maybe be even testing the bottom Bollinger if this thing wants to curl up. Now, we could notice at this level that if we do get some kind of further selling, we most likely will set up some kind of left head and right shoulder and break down to lower levels, most likely testing this trend line here, which is the wedge that the Qs have been in for quite some time. That's a good place to bounce from. So if we're going to have some bearish time over the next month or so, then we could see this level as important, because look how much we have surged from that level. So if we actually come into this gap, it's going to be a very good sign if we do see some buying come in that this is going to curl around. So really at this point, I'm still going to pay attention to the same thing. I think unless something really bad happens and we start to break through this and close below it, maybe on a weekly, then I would start to get overly bearish, right? I would get a little more bearish on this. But as of right now, if this does roll over, I do see us curling back up into that positive territory and getting one more push in this overall move. I'm just going to talk about why that move could happen, and the overall reason that move could happen is just because we're actually in a time where the rate cuts are seen as good news. Everyone still has the soft landing in their mind, right? So if we do get some kind of pullback and then we get that first rate cut early on in the first quarter of 2024, we actually could see another big surge like this one, right? We could get another big surge like these, because people think that we're not going to drop, but actually we are most likely going to drop as those yields are coming down rapidly, which the bond market is kind of hinting to us, hey, something bad is going to happen unless they cut these rates pretty quickly. I am going to do some more live videos. I just have to find some kind of schedule, but on the live video, we were really paying attention to this at the end of the day. I overall was stating how, yes, we do have divergence at this level. We do have divergence, but we look like we're getting some continuation triangle forming. Now, this could break to the downside, this could break to the upside, and that's why at the end of the day, we were paying attention, because this bar looked like it was about to break. So we said, hey, let's pay attention up in here where we've really struggled, see if we're able to break out. And it actually faded at the end of the day, not crossing this MACD. Now, this hasn't exactly rejected this MACD yet, because it's still pretty flat, but if this actually would turn and go into negative territory, you're most likely going to see this broken, and then you really want to pay attention if it's able to hold below this gap fill by the end of the day. If we're able to hold below that gap fill by the end of the day, you're going to be getting into that negative territory, and then maybe you get one more bounce and drop down, starting a series of lower lows. Let's give both sides. If we are going to break to the upside here, then where exactly would we go? Well, this would take us most likely to that weekly expected move. I don't know if this full measured move would play out. People could get very excited and it could get out to here. Look for that to maybe fade back into this weekly expected move, because we do land in this 68% of the time. So we want to pay attention to these weekly expected moves this week, especially when we did just look at all those weekly charts on Saturday. Apple, what did we do this week? We came into the bottom of that weekly expected move, and then we exploded higher actually into the top of that weekly expected move. And that's why those are very powerful. So if you do want those, they're down in the Patreon, down in the description below. And the overall thing that we were pointing out on the daily here for Apple is it's a little different story. You actually do have this divergence on the MACD. You do have this divergence on the RSI at the same time, which just tells you that this could be a more aggressive pullback in Apple. This could actually be a full-fledged reversal in trend in Apple. So Apple's one that you really want to pay attention if it's able to hold up on its recent trend, right? This big trend that it's been in for quite some time. You really want to pay attention to that in Apple, because it has those divergences at the same time. And we really talked about that on Saturday, how if you start to come to lower levels, right, and you break through this level and you're not able to buy back up, you can retest, you can really continue that negative trend down. Now, the last thing on the daily that we should talk about is the fact that we're struggling right where we should be. We're struggling right at that top side of that monthly expected move. I actually gave you that for Apple so you could see it because it's playing out pretty well. And you'll notice that when we get above it, we actually come back beneath it. And we then see it as rejection the second day. So you see the second day, we actually came up into it and sold off from it. We're still in an indecision phase at this point. So we have to see if this is going to confirm to the downside or if we're going to get excited and maybe come and touch the top side of that trend. So there still is bullish and bearish scenarios, but right now the signals are bullish, probably until we get this to curl over and start to see a little bit more confirmation to the downside. The RLE, if you're paying attention to my Patreon, you can pay attention to those weekly expected moves. We have some big moves this week, so it's good to really get those on your charts before it starts, and I'll be putting those out tonight, okay? So I'm working on them. I got the SPY and Qs done, and we're going to do the rest after this video. So if we did want to consolidate and use these moving averages, as we did not lose it necessarily by the end of the day, we actually could see this pop higher. Now, that would get us most likely to that weekly expected move, and we could see some hourly divergence. And that might be a good hint this week that we're actually going to head to lower levels, and we might actually touch the lower side of that expected move before the week is over. On the hourly, you can see this. If we're going to, head lower, we're actually probably seeing some kind of left head, and we're actually going to drop down into this level and get some kind of bounce to get that right shoulder. That's overall how I see it breaking down if it wants to break down as of right now. Most likely that could play out in the future though. If we do head higher, this could just be a bigger head and then we come and make some kind of right shoulder in this area to start that negative trend, get this MACD down into negative territory after it sets up some kind of divergence. So there is still bullishness and there is bearish cases, but right now you have to be bullish as we are in that positive territory. So you need that to flip around and get into negative territory to start that negative trend and then become bearish. I'm going to use Apple to show you guys a bullish case on the hourly, just because if we do sell off early on Monday, we actually could, see this come up to here, maybe drop back off and then come back up and test that level again, maybe giving us some kind of pattern in here. So we really want to pay attention to points of liquidity on the hourly, which tells you kind of where they're going to use that liquidity in order to go higher. So if we want to go higher, we could see that drop off, use this liquidity in here to bounce back up and test that level, and then bounce back down and use that liquidity to actually head higher. So that's just two bullish and bearish cases. We kind of have to be willing to, flip like a coin at this point, because this could go either way over the next week. Amazon was when we were paying attention to the daily MACD. We were really paying attention if that was able to cross, and at this point you're running into some resistance right where we expected to. That connection between these two highs, saw it as important. We're coming up into that area, and if we wanted to go higher from here, we most likely do need to see some kind of dramatic pullback in order to find more buyers. And this level right here, 134.48, has been pretty good to us in the past, right? This is lining up with our other possible left shoulder. So if we do see that roll down and then we come down into this liquidity in here, we actually can bounce from that area, seeing this MACD actually able to cross back up in positive territory and maybe give us another leg to test this high or make a new one. Now, Amazon is very tight, so we can see those bigger swings come in once these Bollinger Bands spread out. So really, it looks like a big move is coming in Amazon. Whether that is going to play up first and then come down, really, you just need these Bollinger Bands to spread out, right? Once these Bollinger Bands spread out, you can get those wider swings, and we could get one hip fire move up to that that weekly expected move, and then we could actually see the bottom tested by the end of the week. So we really have to pay attention to those expected moves, as those weekly charts are looking pretty reversal-like on the bigger time frames. Hourly perspective, we were only able to get into negative territory on Amazon for a little short period of time. So you'll notice as we are in positive territory, higher lows come in. And then once we go into negative, we actually get a low, and then we get a lower low right here. So we actually can tell how getting into that negative territory is pretty dang important, because once we do, we actually see us head down with some lower lows. But as we do get back into that positive territory and we keep crossing within it, we see the higher lows come in, right? So we're still in a higher low period of time here, and we need this to most likely drop off to create some kind of lower low. That way we can get into that negative territory. You can see how Amazon's been stuck up here for quite some time. So whichever way this thing is going to go, it's most likely going to explode. But that could explode higher first and then fade. So really still pay attention to what we were talking about up here. If we do get excited and get past this level, look if that is actually remaining up there, or if we are actually seeing that fade throughout the week. If we remain up in this level, then you have the chance to keep short squeezing. But if we actually don't remain up there very long and we start to see that fade, it could mean that that was a fake out. They're getting you in a bull trap, and then they're going to rip this down the other way. Tesla actually is looking pretty good, right? We got that crossing down on this MACD, and then we immediately crossed back up. We weren't able to close beneath this very important range that we broke out of. Now you're closing the week outside of this, so you have to say this is bullish, and you could come up into that weekly expected move. You could come up and touch this trend that's been pretty important in the past, right? So we've been important in the past on this trend. We can see that when we do get up towards that trend, we see that rejection pretty hard come in, and we can see how that lines up in the past too. So we got touch of that trend, we sell off dramatically. Touch of that trend, we sell off dramatically. Touch of that trend, we sell off. So it's just a point to be a little cautious. I mean, it is a good looking chart at this point. You're in positive territory on the RSI, you're in positive territory on the MACD, and you really just want to pay attention to how price reacts from this area up here. Now, if this does start to quickly get back into this range, we can use this range once again if we start to doodle around, right? And then you want to pay attention to a break to the downside or a break to the upside. I do still think that if we do get a hip fire move up, that most likely will fade and will actually come and fill this gap down here. And we may even in Tesla go down to that 207.42 pretty quick. Now, what we were talking about on Amazon is actually happening on Tesla. It was within a range, right? And then these Bollinger Bands get tight and they start to spread out, which just tells you there can be some bigger swings. So you can tell that we can actually come up to the top of this Bollinger. We could come down and test this area one more time and then see this kind of bounce back and forth. So once these Bollinger Bands do actually start to spread out, you can see volatility possibly increase, and that can give you bigger swings in the overall market. On the hourly, you are getting some consolidation to catch up to some moving averages. You might want that to actually sell off a little bit more because you're sitting right at that that overbought territory. Now, this thing can get more overbought. This could be some kind of ABC pattern to head higher. And where exactly would that take us to? Well, it would take us outside of that area. So we really need to pay attention to it. But if this does want to consolidate a little bit more, maybe curl over on this MACD first, right? Really pay attention if that's able to curl up again. Okay, if we see that curl up again, then it's a good chance that we are actually going to make a new high and come and test these levels. But if we do cross and keep going down, we may be starting to see that negative trend beginning. So we could see this actually break down, use this level down here that we've used a few times, but this time maybe it's just a bounce to then head to lower levels and start that negative trend. Now, Nvidia really did lead this market on the downturn on a bunch of stocks that did see some a little bit more selling. We actually saw that Nvidia really crossed on this MACD first. It gave you some indication of some divergences up here first, and we can see that we were paying attention to if that MACD is able to cross, and it was able to cross. The only problem here is you're still within this this flagging here, so we're still within that flagging. We weren't able to break above it at this point. We actually faded below it, and we could see this actually ripped away pretty quick. So we want to pay attention to this. I would still be paying attention if we're able to get a closing bar outside of this consolidation. Pretty bullish thing, right? You're crossing on the MACD in positive territory. Tells you have a chance to come test this high. And maybe, just maybe, this is actually going to play out and we're going to see some kind of ABC pattern, and you can see how high this would actually take you, right? We can see this come all the way up into this point of about 563 and before this is actually done. So if we do get that really bullishness over the next couple of weeks, it's really something that you need to pay attention to because of our Saturday video. We talked about if stocks do keep getting excited, you're kind of asking for a more dramatic drop. The other side of that coin is maybe this is some kind of false signal, right? Maybe this is a false crossing at this point. We're still within this flag, and we're actually going to see an ABC pattern to the downside. So we want to pay attention to both sides of the coin because we're in a bullish state, but we're seeing some bearish signals. Where would this take you to? Well, we can see right here, it would lead you into all these gap fills. So we can see this gap resistance, gap fill area come into play pretty quickly over the next 2 weeks if we want to start to come down in Nvidia. On Nvidia, I've been paying attention to a 2-hour for the shorter frames. I've really been looking at some divergences that were up here, but those were kind of unconfirmed. Those were kind of invalidated. So at this point, you are closing back within that flag, right? But we can see this MACD is still in positive territory on a 2-hour. So if this keeps remaining in positive territory, then you're going to see that bullishness continue. But if we actually pull back, then you have the chance that this rolls into negative territory and we're going to cut out this low and start to make a new one. So what you really want to pay attention to on this 2-hour for the shorter time frames is if this MACD does roll over, we get some more pullback, and then this is able to curl up again, it actually is a good sign that we can go into positive territory and test this high or make a new one, maybe even testing this one. So a 2 hour is very good to pay attention to on Nvidia if it's able to, cross down and get into negative territory and stay there, break below this little trend here that is our flag, and it's a good sign that we're at least going to possibly come and test this low. And last stock I'm going to squeeze in here is AMD, because AMD is overall what I was paying attention to last week, because it's a little bit of a different take. This thing has really surged and it's testing the top Bollinger over and over. Looks like it needs to pull back to reconnect with some moving averages, but we can give you those weekly ranges. And I just wanted to show you AMD because we could get a 5% move up or down before the week is over. We could actually get a 5% move up and then see that fade and then get another 5% move down from the center point here before the week is over. So we really want to pay attention to these types of things, and it really looks like this needs to pull back. If we're actually going to cross on this MACD this week, then I believe we will get some bearishness come in. And what we'll look for is if this recent trend is able to hold up. If we come into this trend pretty quickly, right? If we come into this trend pretty quickly, we need to pay attention if that's able to hold up, because if it doesn't, we actually could break down to this 116.81 level, see some kind of bounce here, and then that could be a head and shoulders to actually tear us further down. So we really got to pay attention to this. But on the bull side, we can see if this MACD does roll over and then stay in positive territory and roll back up, it's a good chance that we're actually going to see this test this high, maybe even come and make a new one. Now, if that second scenario happened, yes, that would still be a bullish thing, but then you would have to pay attention to if that divergence up here is going to confirm. If this actually rolls over and then rolls back up, you could see a small divergence up here on the MACD and RSI at the same time. So we really want to pay attention to these signals, especially looking at those weeklies on Saturday. We just need to pay attention to them because it just tells us, hey, sure, things are bullish right now. But on the weekly, you're seeing some setups that could mean there's a big downturn for the next 6 months. So we want to be just a little bit more cautious in this area. Real quick on the dollar, we were talking about how we're actually setting up maybe some kind of divergence down here. On Thursday, we mentioned that, and on Friday, we get a pop. So even though we're seeing some indecision in a lot of stocks in the market, some stocks even heading higher like Tesla, we're actually seeing that dollar creep up. And if the dollar actually creeps up, then we're going to see stocks suffer because they have that negative correlation. So when the dollar goes up, the stock market comes down. And if this divergence does confirm, you do have the chance of a pretty big pop in the dollar coming very soon. VIX, we were showing you guys that divergence on the weekly the VIX has. So if that ends up confirming, it's going to mean bad news for 2024, especially early on. So we want to pay attention to the VIX right now because look how tight this Bollinger Band is getting. It got even tighter. Every single day we talk about it, it's getting tighter and tighter right at this 1212 level, which is known to produce those big volatility spikes. So we want to pay attention to this and see if we're able to keep this up, right? If we're able to hold above the 50 for quite some time, then we can see a big pullback come into the market, right? So we want to pay attention to it. But if this is going to be the overall crash, we just need to pay attention to this 50. If it's able to cross above the 200 and remain like this, kind of trail upward above the 200, then something bigger could be happening. Some kind of crash, some kind of bear market could really be happening right in front of you. So it's something very, very good to pay attention to. And right after that, I just wanted to pull over the VVIX because you'll notice the VVIX actually had a divergence down here, right? We had a divergence on the MACD and on the RSI at the same time. Flatness on the RSI, divergence pretty steep here on the MACD. So we can see this get into positive territory pretty quick. And look, it took back a few moving averages. You can really see how that spiked, which just tells you that the volatility of volatility, meaning volatility itself, can go up pretty quickly with a big bar like this. The 10-year yield, we were talking about how this is dropping off dramatically on Saturday and why that is overall happening. And I'm just going to give you a little lowdown. The reason that this could be happening is actually because these TLT traders saw that they are pricing in 75 basis points and they're saying, hey, something in the system is not going to be okay if we actually don't cut even more. So right now they are pricing in, these bond traders here are actually pricing in 150 basis points. So because that's double what the overall, the Fed is doing, we have to pay attention to it and think, what is smart money telling us? What are they seeing in the overall market that could cause these bonds to skyrocket? And most of the time that is people running to safety. So the fact that they're running to safety a little bit quicker, telling you that the Fed actually needs to cut more, could mean that something is breaking in the system, and that might happen in the early stages of 2024. I just wanted to pull up a line chart because we are going to go over the put call ratio, but this point right here is very important. We noticed that at this point, we actually did see the market start to pull back, start to consolidate on a larger scale, right? We started to consolidate down at a more aggressive, I would say, negative trend, right? So we want to pay attention to this. Why? Because the put call ratio is actually sitting at the exact level that it was at right before that happened. Okay, so just a couple days before that happened, we hit this point right here, and we're hitting that point right now, which just tells me that over the next month or so, there are some calls that are really coming into this market, and people don't think that this market could come down, which is actually usually the point where you need to be a contrarian and say, uh-oh, the market's a little too bullish, so I need to be a little bit fearful that this is going to go up in the near future. So the overall takeaway from this video is we could see some bearish things happening in 2024, and it's really looking like 2024 is going to be more of a struggle in the market. So we want to pay attention to what is happening over the next 2 weeks because of all the things that we were focusing on Saturday. When we look at the bigger picture, it looks like we could see some kind of downturn over the next 6 months. So we want to see if we can, position ourselves correctly in order to catch that move. Thank you guys so much for watching, even though I do look like a little 21-year-old boy now with my beard cut and my haircut. But I really appreciate you guys watching. Really means a lot to me, and I wish you guys all the luck in the world with trading this week. And I hope you have a great, great night. All right, peace.